Welcome everyone to Vets Day here on Friday. We're lucky to have Marcella Connolly here. She's been a really great contributor to Sheridan Mentoring in a lot of the different groups, and she comes often or almost always to my conservative trading group on Mondays, and I know she visits Dan's, and I think you go to Mark's
too as
well. You do all of your equal opportunity there. That's great. So we really appreciate that. And, you know, she's always doing something interesting, and I really like this call diagonal trade that she's been doing lately. But at any rate, thank you for joining us here, and I'll let you share and talk about your trade.
Reason that I decided to sort of start looking at this trade and researching this trade was because I wanted a weekly trade. With all that was happening since January, beginning of January, I wanted something that had no risk on the downside because of the way the market had this pattern of selling off quickly and then selling off on a Friday going into the close. And then I also needed something that I had pretty much a lot of room on the upside, and that's something that was going to give me negative deltas to balance some longer-term trades, which allowed me to stay in those a little bit longer. And this one has
That's a good point I hadn't thought about, Marcella, is, you know, when we talked about this trade in, you know, sort of just in isolation, but it is negative delta, and if you do have your long delta trades, that's a great point. I hadn't thought of it that way, but that's good. Yeah.
Well, the way I was looking at it is with the sort of short, sharp moves down, this is something that you could sort of take a profit out, and then as the market retraces, you know, go back into it again and do the same. But it is balancing the other deltas.
Great.
And also this, I wanted a short term that has sort of a lot of theta and positive vega. And I find that this trade, whatever it is about the positive vega on the way up, it seems to, one minute it looks like it's down a lot, and then it sort of balances out. So it's as it works its way up, even if you're, you know, if I can show you on the screen when I pull that up. But the setup anyway is that I'm selling a 25 delta call, 10 days to expiration. I mean, you could sell on the Monday or the Wednesday, of course. Like I was looking at this in relation to the Russell trade. That I was used to do. Although I'm doing this in the SPX, I did back test it in both the Russell and the SPX. But I back tested like every week for all of last year, just you know, just putting it on roughly on a Tuesday and seeing how I'd manage it. And I did find that it was more.
Sorry, Marcel. So Tuesday, for the SPX is really. I think that's really 9 days, right? And 10 days is what one tells us, right? Because it's off by a day. Yeah. So just for
similar to where I used to put on the Russell calendar.
Right.
Similar that I was looking for something that I didn't have that risk on the downside.
And I really like that time period, Marcella, because it gets you in early enough that you can get some credit and theta really starts to take off, but you're not in so late that you're, you know, you're worried about the gamma too much, right? Because the gamma starts to kick up the last week. Because most of these trades you're not in that long. You're probably out the first week in most of them. So I like that time frame a lot.
Well, I've been out for most of them in about 2 days, and one of them last Thursday I was out in the same day. So it is a very short-term trade, and I think as I'll show you, one of the ones I was in that I put in last week, if I'd have left it on, I still would have probably got maybe the same or a little less profit than I did actually going in and out of it twice in the 1 week. So it still seemed to be pretty resilient.
That's always a dilemma, isn't it? If you get a profit quickly, you know, in a day or two and you take it off, do you go in again, or were you better just leaving it on? I mean, obviously from a commission perspective, if you knew that, you would have just left it on, but, you know, so it's always an interesting trade-off.
So, as I said, I'm selling a 25 delta call with 9, 10, 11 days to expiration, and well, with me, it's probably the on the Tuesday, whatever that is in TOF, and then buying a long call in the next week, 25 to 30 points away to get a decent credit. Sometimes I've got credits about 9%, sometimes 13%. But even with the market, as I said, when I back tested it all of last year, even with sort of low VIX, I was still able to get decent credits. So, so it didn't seem that only because we're up at about a 22 at the moment that you can just do this trade. I seem to be able to get a consistent credit all along, no matter what the market was doing, whether it was going up or down or sideways or wherever way it was going.
Right.
I think it's good to enter the trade at the highs of the day if possible. Most of us are sort of looking to see, when's a good time to enter, and that seems to, at least give you a little bit of an edge to do that. And the plan then.
Do you have any? I was just going to ask you. Do you have any tricks or or techniques you like to use to see if you think you might be at the high of the day? Any kind of indicators or anything?
I think normally I sort of watch the market closely in the first hour to see where we're sort of making the highs and lows, and then sometimes after the close, the European close around 12:30, I'm watching that to see if we're sort of getting up very high, and then sometimes I've put it on at the end of the day if we had a big run up, and we didn't sell off. Right. At the end of the day. So it just depends on what we've sort of done the day before or what I think we're likely to do. So
that's not a critical aspect of this, right? That's just a nice to have, right?
Yeah.
Okay. Okay.
As I said, you could put this, if you came in and you thought the market was going to go down 3 standard deviations in the day and all hell was breaking, you could stick this on and make money as the market goes down. So it would work that way also. If you were trying to offset some deltas in another trade. The way I was looking at it, instead of just buying a put, at least if you have to stay in it another day or two, you're getting a lot of theta as opposed to losing theta.
Right.
So that was another, thought that I had.
Emmett mentions using, on the chat, he's mentioning using RSI on the hourly chart. And then if it's above 60, it might be a good time to open a trade like that if you're looking for a high. So that's
yeah.
Yeah.
Okay. Then I think to take if you reach a profit of 7 to 8% in one day, I'm going to take it. If you see there's a short sharp move down, and I've noticed that it's sort of if the short call gets to around a 15. I thought it was 16, but I was looking, it was really like a 15 delta. It's probably just like in a regular diagonal that we learned, take it off at 16, and then you can always go back in when, at another time when the market sort of settles again.
Yeah, I like this, the way you've done this, because I think too many people, look the gift horse in the mouth, right, as we say, right? So
yeah.
Getting 7 or 8% in a day, and I think you even had some ideas about what to take in 2 days or 3 days, or maybe there was somebody else I was talking to, but I like this, even if your target profit is a little higher than this, if you get it really short term, take it,
Yeah.
So I don't
think this is something you'd want to sit around and just waiting for the theta to burn. I mean, you can do that, but I think if you can get your profit, get it. You can always, the market has raced down and up in the same day. You can always get back into it if we go back up.
Yeah. And I think if I said, would you take 4%, you'd probably say no, right? Because
probably not. I want to get sort of the majority of my credit.
And I think that's the danger some people fall in. They kind of take that advice to heart, is if you get something quickly, take it. But it has to be something reasonably substantial, because what you don't want to do is be in a trade like this and make 3%, 4%, 3%, 4%, and then lose 15, right?
Yeah.
It wipes out 4 or 5 trades. But at 7 or 8%, that's a very reasonable place to take it. So, good.
Yeah. So I think I've covered those 2 points. Then the possible adjustments. I think there's numerous ways of dealing with possible adjustments on this trade. I mean, I'm in one at the moment that's down a little that I got into yesterday. I did consider which I probably should have done this morning when I thought the market was going to go up. I was only about sort of 10, 20 cents off what I paid for the call, what I sold the call for yesterday. And I probably should have just bought it back and let the call run up a little and then sort of dealt with it. But I didn't do that. I'm not worried about the trade unless we start getting up about, I think it's sort of, when you start getting up around 35, 36 delta, keep it, not that I do anything particularly at that point because I take some other things into consideration. Like we're on a Friday, there's a good chance we, you know, even though we shoot up, we might sell off, or you could always buy a call if you're worried about it. But as I said, the one I'm in at the moment, I'm using it to offset my other trades, and they're doing better, so I'm not really too worried that, you know, if I'm down. But even as the market was going up, I was still only probably down, you know, 5 or 6%. You know, might be a bit more. I'm looking at SPX at the minute, but.
So when you say 35 delta here, you're talking about the delta of the short call going
the short
from 25
call,
to 35,
yeah,
right? Okay.
Yeah, but I think in any trade, we're watching if it moves sort of 10 points, you're kind of keeping an eye on it to see what you know, what you should do. So as I said, I think there's numerous ways of dealing with it, either buying back the call and letting the long call run if you think we're going to, you know, SPX is just going to run up, but I still probably would want to take the long call off by the end of the day if I thought that was going to happen. Then if the deltas of the short call go to 15, obviously, as we discussed, take the opportunity to get out and wait to re-enter. And because I said I've done it, I've started doing this trade around the 12th of January. I think I'm in my 6th one, and I've had 5 out of 5 wins so far. So I think, you know, that's what's been sort of keeping me sane for the last couple of weeks.
And you were saying you back-tested it for the whole year, right?
I back-tested for the whole year, not being too careful whether the market was up, down, or, you know, what particular time I was putting it, and just sort of see what my response and my reaction would be of how I would deal with it. So I felt there was numerous ways of dealing with it, depending on what you thought the market, you know, was likely to happen that day, or how early you were in the trade. So then,
so maybe you can show us once you get to it how some of those adjustments might look.
Sure. So I can go to the screen, and so as I said, the other adjustment is considering, you know, you could simply sell another 25 delta call further up and widen the space. And as I said, if I was getting back into this sort of late on a Friday evening, I'd consider maybe not just doing the 7 or 8 days, but maybe doing 14, 23, maybe then trying to get out Monday, which is what I did last week. I got in at the end of the day and then got out on Monday, and then got into another one on Tuesday. So I think it is a pretty short-term trade, but so I think there's really numerous ways of doing that.
I like that last one too, Marcella, because, you know, 25 delta when you get down to 7 days isn't very far away.
Yeah.
You know, and I'd like to be a little bit further away. You know, if you're going to re-enter on a Friday, I agree. But
that's like if we have I'm talking about like last Friday that the market just shot up and didn't sell off at all. That's a good time to get in. So I think there's numerous ways of dealing with it. As I said, there's nothing new in this trade. It's just simply like half a double diagonal, you know. But but the fact that I'm just dealing with it shorter term and keeping it tighter is as I said, and offsetting the other diagonals.
I think for people also that, you know, maybe haven't done a double diagonal because it seems a little bit more complicated, and it is a little bit more complicated. You've got both sides to deal with. You've got your credits to deal with, and you figure out where to move everything and how to adjust it. This is a good way to get started, just doing half of it, and it's great for this particular market as well. So, you know, when people are maybe a little bit more fearful of what might happen on the downside, so I think it's really timely for that reason.